Hello everyone. Thanks for being on time. Hello to those who are here. Let me know if you can hear me and see me clearly. Let me know in the chat section if you can hear and see me clearly, if it's all good. Can you hear and see me, everyone? Okay, I see some hands up, but can you hear and see me, everyone? All good. Okay, Junjiang, thanks for letting me know. So good morning, everyone. Happy Tuesday. Okay, can hear and see. Okay, great. So good morning, everyone. Happy Tuesday, and thank you so much for being here and for being on time. So we are at 11:01. So take a moment to get settled, and let's give the rest maybe 1-2 more minutes before we officially start. Good morning. Good morning, everyone. So yeah, for those of you, okay, I see that there are about 70 of you here already. Whoa, okay, nice. So yeah, for those of you here, I'm just curious. I have one quick question. Is this your first time joining a Halogen webinar? And also curious to know, how did you find out about us? Like, did you find out about us through social media or referral from someone? Did your client or your friend referred you to this webinar, or maybe you found out about this event through a forwarded WhatsApp message? So let me know what brought you here. Nice. Not the first time from social media, Facebook. Not the first time social media. Okay, some are your some first time, some not first time. Okay, great. Those who are thanks for returning. For those who have not tuned, I mean, like for those of you second watchers. So yeah, so first time I'm applying for MR with Halogen. Nice, Aslina. So first time. Okay. So thanks for sharing with me. So I think okay, we have a good number now. I think there are about 80 of you here. Okay, nice. Thanks for joining us. So I think let's get started. So to those who just joined, good morning and happy Tuesday. Nice to meet you all. My name is Jia Ying. I'm from the Halogen Capital team, and I'm your host for this session. So great to have all of you here this morning. And all right, so the fact that all of you are here, I am guessing it's because you're intrigued with what's happening in the crypto space. So, for example, maybe in the last few weeks, you have seen Bitcoin hit an all-time high, like 73K, right? And throughout these few days, or maybe these few weeks, you have also probably heard people mentioning about the term halving, or Bitcoin halving event, which is also scheduled to be occurred in April, right? So during this period, many people have been also asking us like these very few questions. Will the halving drive up Bitcoin's price? What should I anticipate as an investor? Can I still invest? Is it still too late? So yeah, we have people asking that have been asking us these questions, and hold on to all these questions because we have two very interesting speakers today to address all of these burning questions and inquiries that you may have. So allow me to introduce our speakers for today. So our first speaker for today, as you can see on the screen, is Zhong. So Chong Yang Chan, or we call him Chong. So he's currently the head of research at CoinGecko, which is the world's largest independent cryptocurrency data aggregator that tracks 13,000 over different crypto assets. So prior to CoinGecko, he has led the innovation department at Securities Commission Malaysia, and was a key driver in the formation of policies regarding cryptocurrency. So it is thanks to him that we can actually invest in crypto safely in Malaysia, right? So next we have Colin Gore. So he's our head of trading at Hilton Capital. He was previously the head of Forex trading at OCBC Bank, a household name in the banking industry, and he has with him over 10 years of experience in global markets with strong foundations in Forex spot and option products. Besides this, he also has a wealth of experience in global macro and cross-asset trading, which includes cryptocurrencies as well. So I'm thrilled to have both of them today to share their thoughts on this topic, which is Bitcoin halving 2024. What should investors know? So Chong and Colin, do you want to say hi first?
Hi everyone. Excited to be here.
Colin?
Hey guys.
Hi. Okay, so
Yeah.
so that's Chong and Colin for you. So all right, to those who's tuning in, please leave us your questions accordingly in the Q&A box, and then we'll answer them during the Q&A session later. So let's keep this session as interactive as possible. So, all right, I think Zhong and Colin, floor is all yours.
Okay. Hi everyone. Like Jiaying said, I'm Zhong. I'm the head of research at CoinGecko, and I think what I'll do today is sort of try to set the scene for you guys listening in, and help you sort of understand what is halving, what are some of the background behind halving, what has happened sort of historically. And it'll be quite quick, and then I'll pass it over to Colin later to really talk about the TA stuff, right? The financial advice stuff, because he's licensed to provide financial advice, and I'm not. Yeah, so I'm just gonna go straight into it. I think well, if you've been trading cryptocurrencies, or you've been active in this space, chances are you probably heard of us. But I guess and Jiang gave us a quick introduction. But what is CoinGecko? So CoinGecko is the world's largest independent data aggregator. We like to say the shorthand is we are like the Yahoo Finance or the Bloomberg for crypto. We track on our main website over 13,000 cryptocurrencies across 1,000 plus exchanges. So any coin that you probably think of, probably curious about, wondering, you can find it on our website and on our mobile app as well, obviously. We also track NFTs, the floor prices of NFTs across all the chains that you can think of as well. And again, that's available on the website and on our mobile. We also have I would say a sister site called Gecko Terminal. Is also a product by CoinGecko. For those people that are really degen, I guess this is our deck screener competitor, like I was explaining to Colin earlier before we started this call. For people who really understand DEXs and trade the craziest coins on DEXs. Finally, for those building projects and stuff like that, we do have APIs that you can get all of our data available through a subscription into your site or into your project. So if you're interested, hit us up. Go to www.coingecko.com, and you can see all these things and reach us from there. So yeah, so that's sort of CoinGecko. Let me get straight into it. I think history of Bitcoin halving. I think when we talk about Bitcoin halving, it really is pertinent to go back to the start of Bitcoin, and where Bitcoin came from, and why did Satoshi and I guess a group of the early guys, people like Hal Finney and all, build out this sort of mechanism. So Bitcoin, if people can cast their minds back to 2008, maybe some people was still very young then. I think some of the younger guys listening in, where there was a global financial crisis, and subsequently, I think it was the first time I think, well, not ever, but the first time in one of the first time in history where the government decided that the solution to the financial crisis was to print a lot of money to bail out the banks so that they don't collapse. And that you can see, I think, from the headlines. This is the Times from London. Chancellor on brink of second bailout for banks, right? And this is very famous because this was actually the headline that was inscribed onto the first ever block created on the Bitcoin blockchain by Satoshi, as a reminder of where Bitcoin came from, right? And what really sparked the genesis of Bitcoin. So because of that, because Bitcoin really came as a response to this, it was designed to have three, I would say, very important elements, right? So firstly, I think you can see from the 3 bullet points is anti-inflationary, right? So this is quite famous. I think everybody knows this. There will only ever be 21 million Bitcoin ever created, right? This is written into the protocol itself. I would say almost impossible to change. It is not that it is impossible to change. It is possible, but you would need significant social consensus to make this change. And this, I would say, like, practically impossible. I mean, if this is one of the 3 key pillars of what underpins Bitcoin, and if this ever changed, I think there will be a collapse, right? In trust and confidence in Bitcoin. But anyhow, so this is one of the most key important pillars of the Bitcoin design. I think secondly, having a predictable and independent long-term monetary policy. So Satoshi and all believe that, you really shouldn't have the governments or the central bank deciding arbitrarily whether you can print more money suddenly, right? To sort of, do whatever they want with it, right? So, that means that, you know, everything is built into the code, right? So the protocol, if you can read the code, right, if you can read the white paper, tells you exactly when, how much Bitcoin is being emitted every time a block is created, right? Which is about every 10 minutes. So we know, so it has a very, very predictable long-term monetary policy. Obviously, in the short term, things may change depending on hash rate and things like that. But in the long term, there is a very, very consistent, and again, same with the anti-inflationary arm, like, you know, almost impossible to change. Will be crazy if they ever changed it. Emission schedule coded directly into the protocol. Finally, and I guess this is where the halving comes in, is that Bitcoin is meant to be also scarce and fairly distributed. So it could have been very easy, I think, for Satoshi to say, okay, there will be 21 million Bitcoin. I will mint it all right at the start, you know, when I created it in 2009, and then you know, and give it all to myself, right, and give it all to the early adopters and things like that. But I think Satoshi had and the early team had the foresight to say that no, this doesn't really make sense, right? So there was a bit of, you know, altruistic sort of streak in the design to say that, you know, even if people came late to Bitcoin, there needs to be a chance for them to also acquire Bitcoin, either through like mining and things like that. So how do they create scarcity, right? So you still want to reward the early adopters, but, you know, you sort of still want to allow, you know, newer people that come in to be able to acquire Bitcoin. So what happens is that there is a emission schedule that starts, and then every 4 years or so pretty much every 4 years, the emissions will halve, right? And we know this, right? It's like the Olympics, right? Well, something that happens every 4 years, or you know, the football World Cup, right? Everything happens every 4 years. Regular scheduling, that the emissions will sort of halve. So there will always be Bitcoin emissions, and we'll talk a bit more about this, you know, on the next slide. But it continues, right? This continues all the way to about 2000, the year 2140, right? And you know, there will always be new Bitcoin created, but it will the rate of creation slows down, you know, over time. Yeah. Finally, I think what's also important to point out is that obviously, you know, each time a block is created, a new Bitcoin is issued, and these actually serve as a subsidy for miners, right? So some of you may know that, you know, Bitcoin can operate or can run, the blockchain can operate and run because there is a bunch of miners out there, or well, I shouldn't say a bunch now. There's an industry of miners, I would say, because it's quite a big industry now. That continues to operate machines that secure the network. One, so they make sure that, you know, the network is secure, the data is always accurate, and produce more blocks. So every 10 minutes, there are blocks that can capture new transactions and things like that. So what these emissions do, so these emissions actually help subsidize some of the costs for them to run these machines, because, you know, they're running these machines in data centers, or even in your own home, you could technically run a machine, even though it'll be very hot and very noisy. Yeah, but essentially you get some of this as sort of a subsidy and a reward, yeah, for continuing to do this work for the Bitcoin blockchain, right? For the network itself. Yeah. So this is what I talk about from an inflation rate perspective, and sort of the monetary base of like how many Bitcoins are being issued over time. So you can see, I think, you know, from the chart, you can see that, you know, the inflation rate dips, right, each time every 4 years, right, pretty much. And the reason is obviously this thing called the mining, called the halving. So like each time there's a halving, the inflation rate pretty much drops significantly. So you can look on the table as well. I think some people could probably understand the table. So prior to November 28, 2012, right, the rewards per block was about 25 BTC each time you were a successful miner. So 25 BTC essentially were being issued into the network every 10 minutes each time a block was created. And, you know, so the inflation rate was about 9.6%. Obviously, this was the early days of Bitcoin, and, you know, we are way past that, right? We are now into here, right? So May 11, 2020. Right now, still like every 10 minutes, you are seeing 6.25 BTC being created every 10 minutes, and that's the inflation rate is about 1.8%. And yeah, in April 20th, I think the date right now is closer to April 15. So like I said, in the short term, things may vary, but essentially, I think between, I would say, quite sure between April 15th and 20th, we are going to undergo the fourth halving, right? And this will bring the rewards per block down to 3.125 BTC, exactly half of what it was between 2020 to 2024, right? And obviously the issuance rate also reduces, right? So like I've already mentioned, so because of the way this halving thing works, currently about 19 million plus of BTC, or about 94% of the tokens have already been mined. But because of the slowing inflation rate, this can continue all the way to 2140, right? To the year 2140, but obviously getting less and less and less. If you ask me, right, like, besides the market, right? So we'll talk about the market after this, like who is the direct beneficiary or the direct people impacted by the halving. Actually, like I already mentioned, is the Bitcoin miners who actually depend on this block subsidy, right? So they depend on this block subsidy to actually fund their operations. And in the past, actually, there have been a lot of concern, right? So because the emissions are half, so technically, if you were running a mining company and you were building a business case for this, for example, you would say, hey, suddenly my revenue is going to be reduced by half, right? So that is crazy, right? After a certain point. And the only way the revenue can go back is if the price doubles, right? So you're getting half of what you get, but they are twice as valuable. So that's how you can maintain your revenue to keep your business going. But I think with all the new developments that are happening on Bitcoin, and we saw the run up already before the halving itself. The new break-even price, I think most people are estimating, because we have publicly available data on some of these miners who are public listed, actually is about $40,000. So actually the miners are sitting in a very good place right now at the current price, right? So obviously they are already profitable at this point. And even if after halving, if we can keep at this level at about 70,000, they are definitely in profit, which is good for them, because in the past, there has been some significant worries. But at the same time, I think that has also galvanized a lot of miners to sort of rush in, right? So to add more machines into their stable of machines to sort of try to maximize their returns before the halving. Because in reality, it's still halving, right? It's from 6.25 or 3.125. So you want to maximize the returns that you get before before the halving, before April comes around. So we are seeing a lot of miners actually add machines into their stables. Yeah. So let's talk about price. And I think historically what has happened, and I think the first thing is why everyone is so excited, and why I guess most of you guys are here, is because you probably heard that BTC will always hit the all-time high, right? Will always create a new all-time high after a halving. Because of, I don't know whether you believe in supply demand memes or things like that. Yeah, each halving thus far has also kicked off a crypto market bull run, right? So every time there's a halving, after the halving, the market generally goes for a run. We have seen this already happen, obviously, 3 times in the first, second, and third halving, which has sort of led people to believe, to watch this event very closely, I guess. And as a sort of like head of research, I guess it's also my job to tell people, correlation may not be causation, right? And when we take a closer look, I think it bears examining closely. What has happened during each halving is that there are also other factors at play that sort of drive up the crypto market, right? Each time there was a halving. And it's not necessarily because of the halving itself, I guess, that sends the market onto a bull run, right? So you can see the points on the left. I think the first halving was really long ago already. Sort of coincided with quantitative easing program. So I think they halved in November, but the QE program sort of kicked in you can see the price actually is pretty flat, even though I know it's like this is a logarithmic scale, so it went, yeah. But this sort of run up only really happened in January 2013, which is about 2 months after the halving, where the Fed started announcing a QE program and started printing a lot of money. It was the same story. Similar story, I would say, in 2016. I think if you look for signs, there's always some signs there, right? So during 2016 second halving, it didn't run up that much after the halving, right? It ran about 50% up to January 1st, 2017. But what really happened to kickstart the bull run, I would say, is that in 2017 Q2, the oldies, I guess the OGs will remember that that's when the ICO stuff started, right? And the ICO stuff, you know, a lot of projects started going out there, issue their own tokens and able to, you know, raise funds and things like that. And that sort of kicked off, you know, the bull run following that, right? Finally, when we come to the third halving, this was in 2020. Again, you can see, you know, from the price action perspective, actually didn't move that much. I mean, there was definitely a small pump, but what really happened was that, you know, this was yeah, in May, and then sort of by mid-June, we sort of had DeFi summer. So DeFi summer, if people can remember back, so it really started with, you know, the airdrop of the comp tokens for Compound. You know, suddenly DeFi projects realized, okay, I can, other than like the native yield that people get from depositing money, depositing crypto in my platform, I can, you know, sort of airdrop people tokens and they can get even more money, and that will incentivize people to use their DeFi protocol. So that was Comp, that was Wi-Fi, that was Uni, and sort of after that, you know, that was the whole frenzy, and then it flowed into 2021 with NFT summer and things like that. And then we had a short window where play to earn, you know, Axie Infinity was also a thing, and that sort of brought the market on. So yeah, so I think these are also things that we observe in the last three halvings around, you know, what are the other things that could contribute or have contributed to a crypto market run up and bull run. Yeah. My last slide before I turn it around to Colin, I think probably went on a bit too long, is that, you know, what is different this time round? And I think there are four key things and maybe a fifth thing that I want to mention. I think one is definitely the macro conditions are very different. So like I said, you know, Bitcoin was created 2009. And that was actually a period where, you know, government was printing a lot of money. It was some people call it the zero interest rate policy time, right? And we have had that for almost a decade. And you know, you can see, I think this is the chart of the effective Fed fund rate has been close to zero, and there's a run up to 2%. But essentially where we are now at 5.33% is the highest it's ever been during Bitcoin's history. So we have and by extension, I mean, you know, history of crypto. So we have never really had a moment in crypto's history where the Fed fund rate was actually this high, right? Secondly, I think, you know, is on the opposite end, you know, Bitcoin and in particular and crypto in general has never had this much interest in, you know, institutions. You know, Halogen Capital is actually a reflection of that, but you know, obviously the US spot Bitcoin ETFs, you know, being launched earlier this year also, you know, we have seen a lot of people put in money into these institutional products. You know, Hong Kong and London today have announced that they are also going to introduce institutional crypto products in the market. So we're going to see a lot more institutional money come into the market. And this is something that, again, we have not seen certainly to this level. Yeah. Thirdly, I think, yeah, this is something from a price action perspective. We have never seen BTC surpass its previous all-time highs before the cycle before the halving. So this is certainly out of the ordinary. I think finally it's you know, Bitcoin has always been thought of as digital cash or digital gold, but now last year I would say people have started finding new ways to use the Bitcoin blockchain. You know, can create altcoins, can create NFTs. You may have heard of inscriptions, you may have heard of ordinals. This is, you know, sort of new technology. It's still a technology platform, right? At the technology network, right, at the end of it. And this has resulted in, you know, new innovation being created, and the Bitcoin blockchain is being used for different things now as well. So there'll be a big sort of gas fees for miners, transaction fees, and that has actually surpassed some of the block subsidy on certain days. So you can see these spikes where, you know, there was a lot of ordinals activity, and that has, you know, gave miners a second income stream, I would say, that, you know, was previously unexpected. We didn't know that this was going to happen. So these are all very interesting developments. You know, obviously, you know, the halving happens only every 4 years, and every 4 years, you know, you expect, you know, the macro environment to be different, the tech to be different, like, you know, what's sort of happening in the industry to be different. So I think this sets a good stage for the next section, and I'll pass this over to Colin to talk about, you know, what he's looking at from a financial analysis perspective. Yeah, Colin, over to you. Yeah.
Hey Zhong, thanks very much for taking us through the Bitcoin history and the state of things. My section will focus more on, I guess, price analysis and I guess some attempt at forecasting. So where we left off was pretty much, you saw this chart in Zhong's slides just now, which is a similar look of the price history of Bitcoin today on the log scale. So you've seen all that, but one thing to point out here is that actually we kind of believe that Bitcoin follows a 4-year cycle. You might have seen this bandied about the internet, but there is some truth to this, because if you go back to Zhong's first slide about Bitcoin being started at the height of the 2008 GFC with Genesis block on the 3rd of January 2009, by providence or by design, Bitcoin was launched right at the height of a recession, a global recession. And as such, its prices coincide with the highs and lows of the global economy. So visually, we can see that we made new all-time highs following the halving, as was pointed out earlier. But perhaps this is more by timing luck and coincidence versus what happens in an actual halving. But let's not argue with history, and let's take a look into what happens around a halving itself. So I've decomposed the price action around a halving. The chart shows that day 0 is halving event. We are looking at 180 days before and 180 days after. The halving price action is rationalized as miners needing to sell ahead of halving to stay competitive. And as Zhong pointed out, miners do tend to add to their infrastructure to try and maximize their yield. And this does require some capital expenditure. And this is where perhaps the pre-halving dips occur between 100 to 50 days before the halving. We do see some minor rallies, perhaps as people start to buy into the narrative that halving is bullish, because hey, supply is half, right? People do believe that halving is bullish purely from a supply-demand dynamic, where suddenly the demand's the same, but the new supply is halved. Post-halving, we see some static price action, maybe some declines after that, as perhaps we don't, or rather the bullish takeoff post-halving is not immediately materialized. But we can't really argue that, well, looking at this period under study, prices have almost always ended up higher than where we started before. But if we look at the halving line itself, you can kind of see that there isn't really a lot of volatility around the halving. It's just an event that we go through, like goes on, basically, in the markets. And to me, it more or less inconclusive to say that halving itself is a major driver for all the gains that we see in a crypto bull run. It is a tailwind. It is one factor, but it's not all the factors. As was pointed out in the history lesson from Zhong earlier, there were many other reasons for the bull run to kick off. QE3 or QE Unlimited, or QE Infinity, if you remember. The ICO bull run, and 2020 was the DeFi summer and COVID stimulus, where the US government rolled out huge amounts of fiscal stimulus and unprecedented monetary policy easing. So all of this helped to drive Bitcoin's price higher. And if we want to look at halving itself, we can look at some other protocols that implement the halving mechanism, right? So this is where we look at coins like Litecoin and Dash, which are forks of the original Bitcoin protocol. And Bitcoin's code is open source. You can run your own blockchain with it, although there are probably better alternatives now. But so Litecoin and Dash both forked Bitcoin. And they also implement the halving, albeit with different, different like hash rates and efficiencies. So Litecoin and Dash are supposed to be faster than Bitcoin. And this does throw off the cycle slightly. Litecoin started in 2011, I believe, or was it 2013? And Dash started in 2014. Litecoin has gone to 3 halvings itself. And you can see it started in this 2015, 2019, 2023. And Dash had many halvings. based on which was based on the emission schedule. And you can kind of see that there's no real predictive behavior around a halving itself. In fact, Litecoin has a pre-halving pump followed by a dump, and Dash is quite difficult to make head or tail of, right? And these are alternative blockchains which probably don't get as much exposure or use as Bitcoin. So I think it does go to show that Bitcoin has many other factors going for it that props up its value proposition. What has really had an effect, I guess, as mentioned earlier, was the approval of spot Bitcoin ETFs in the US. We talk about supply, the effect of supply and demand by halving. The ETFs have introduced a much larger magnitude and much larger swing in the supply-demand dynamics of Bitcoin. And this is probably one reason why we do see a new all-time high before the halving event, because the demand has been quite unprecedented. And even though we had several days of outflow last week, this new all-time high being hit before the halving has likely spurred the crypto native community to start deploying capital, some of it leveraged, before the halving in hopes of a new bull cycle. And that kind of kicks off what we in the crypto industry refer to as alt season or altcoin season. So simply put, the rise of Bitcoin just creates a form of wealth effect. As Bitcoin rises, we start to see demand for higher beta, riskier investments. And this drives capital into the altcoin universe. This chart here is pretty much the chart showing the growth of Bitcoin's market cap versus the entire crypto market cap as tracked by CryptoCat. CoinGecko also has their own market cap trackers as well. It's just that this was convenient to use and export. But what you can see from the blue line and the orange line is that in the 2020 to 2024, you can see that there's a bit more divergence between blue, which is the Bitcoin market cap growth, and orange, which is the total market cap growth, which kind of shows that alts were, during the big bull run, alts were trying to outpace Bitcoin. And the green line is pretty much how much more explosive the market cap growth in alts can be to Bitcoin, which is what attracts people to go into the altcoin market itself. So essentially, if you were to think about it, Bitcoin is your SPX 500 and altcoins are your Russell 2000. A convenient way to sort of track the altcoin cycle is to look at the BTC Dominance Index. You can find this on TradingView, or it's essentially a ratio of Bitcoin's market cap to a basket of crypto. We only started really seeing alts come into prominence after the first halving, so we have one less data point. But it is fairly clear that alts start to dominate in the crypto market bull cycle. So far, in this cycle, Bitcoin still remains fairly dominant due to, I guess, quite a bit of institutional demand and not a lot of avenue for institutions to get into the altcoin space itself. Going back to the last two cycles, though, you can kind of see that momentum only really starts to gain after a few months after the halving. So where do we go from here, right? We have been having a fairly volatile quarter as January and February US inflation prints have come in a bit hotter than expected. However, we've been thrown a bone by the Federal Reserve as they still have a forecast for only three rate cuts for the year. But going into the March FOMC meeting, the market was kind of worried that the language would change to show fewer rate cuts. This has kind of stayed the course, and the language from the Fed Chair Jerome Powell has been that they are looking past the hotter than expected January and February inflation numbers. In some ways, they are chalking it up to some transitory effects or seasonality effects, and they still maintain that things are on course for their initial base case. Personally think that it's an election year in the US coming in November. And as we get closer and closer to the US election, the bar to hike will be higher and higher, as it's been very difficult for a US presidential candidate incumbent to win the election when the stock market was not doing well, right? So there is political pressure on that front to keep policy easy. There are risks to this outlook, of course, being that the next March print and any form of leading indicator could also come in hotter than expected, in which case the Fed will need to change its policy language. There's also the risk that Jerome Powell and the Federal Reserve will, for some reason, suddenly decide to become politically independent and not bow to pressure from Treasury or the presidency. I think a key point to watch on this front is also commodity prices, which have been trending up. It's also, over the last 2 days, we saw a terrorist attack in Moscow, which could heighten the geopolitical tensions if Russia decides to open a new war on terror front. But overall, I think the landscape is conducive for risk-taking, especially if we look at seasonality effects. You can kind of see that April has traditionally always been a strong month for risk-taking. Looking even in the traditional asset space, the S&P 500 on average over the last 10 years returns 1.87% for the month of April. Gold returns 0.5%, even our own KLCI returns like 0.76%. And if we go a bit further into Bitcoin and ETH, even though the price history tends to be a bit sketchy, we can also see that gains have been very, very outsized in April. If we dive a bit deeper into BTC itself, I think we can say that the structural tailwinds still remain the same. Let's not argue with cycle theory, because it's clearly hard to argue with new all-time highs, especially now that they've been hit again. We've got April seasonality to help us, and also what we would anticipate as easier financial conditions and easier macro landscape from it being a US election year, and also the Fed looking past hotter inflation to focus more on growth and jobs. So there are risks to this outlook. You can see that pretty much the same risk that we outlined earlier. When inflation accelerates, we do have the risk of unprecedented net outflows from the Bitcoin ETFs. You can see from the previous charts that these can be volatile and they can swing the supply-demand dynamics unexpectedly. So far it's been a lot of inflows, but there could be a day where or rather a period where there are mainly outflows. In the last month, we've also seen a lot of leverage and speculative positions being put on. And that contributed a lot in helping Bitcoin break above 69,000 to hit 74,000-ish. You can see from the chart that in the bottom chart, there was a lot of futures open interest and new positions being put on during this rise. And the subsequent smashdown was a liquidation cascade that liquidated a lot of speculative activity. And you can still see that this is kind of elevated. If we look closely at the chart, you can see that the line drawn there coincides with the highs in January, which was ahead of the ETF approval, which people were speculating on an approval. And now we've gone way beyond that. So a second leverage flush is possible, but looking at the previous 24 hours, Bitcoin has recovered quite well, actually, from lows of 60,000 to break once again above 69,000 and hit the 70K level. We saw this on the back of both spot and futures heavy buying that took it from 67,000 to 70,000. And where does this leave us in the price, in terms of price? We've got an immediate range of about 68 to 74,000. below which you could see a drift or a wick down to the 55 to 57,000. It's pretty far, but that is possible. Then again, though, the upside is still pretty much in play based on the factors above. Standard Chartered Bank recently came out with a report that targets about 150,000 price target by the end of the year, and I think 250,000 by end 2025. So yes, bullish vibes all around. We previously highlighted Ethereum as well. This unfortunately has changed quite a bit because of a report that the SEC, the Securities Commission in the Exchange Commission in the US, has decided to go on a campaign to classify Ethereum as a security when it is currently being labeled by the CFTC as a commodity, similar to Bitcoin. To us, this drastically reduces the chance of an ETF approval because it's hard to approve something when its regulatory status as a security is up in the air. So that's unfortunate. We think that a denial is in the cards. It will likely turn contentious. BlackRock and Grayscale will probably bring the SEC to court in that event. And while the eventual decision could mirror what happened in the Grayscale versus SEC case around GBTC, that would take some time. So we've sort of changed tack a little bit on whether we can get an ETF approval, although there are still quite a number of tailwinds that ETH could enjoy, especially from just being beta to a higher Bitcoin price. However, I think this narrative will put a little bit of pressure on ETH, which might cause it to lag behind slightly until something else takes the place of that narrative. And speaking of narratives, we talked a lot about alt season, and this is where there are quite a number of new narratives to watch out for. We highlighted legal challenges in the altcoin space, and Ether is actually considered an altcoin, just the first altcoin. We continue to watch for changes in the SEC engagement with ETF applicants. So one of the reasons why the Bloomberg ETF analysts have also downgraded their chances for an approval is because of the lack of engagement compared to when they were going over the Bitcoin applications. So if we do see some engagement there, the chances could increase. Another lawsuit to watch out for is the conclusion of the Ripple versus SEC remediation hearings, where if you had followed the case in the last year, the US courts had determined that Ripple sales to institutional investors were a security, but sales via electronic exchanges and those venues were not securities. So this is the part where they decide on fines and settlements for the part that Ripple sold unlisted securities to institutional investors. A big narrative that is going on in the traditional finance space is AI, and crypto also has its similar niche. And this has been a very huge growing niche and growing narrative. You can find this on you can find this category being listed on CoinGecko as well, actually, under the AI project space. So decentralized physical networks, or DePIN, form a large category of which AI and decentralized compute is part of. But these projects and this narrative is probably going to take off and be in line with the AI narrative in the traditional finance space. Restaking is also a pretty big one, and is also a reason why we can still be bullish on Ethereum. You can think of it as a rehypothecation of staked Ether to other services, and if you come from a traditional finance background, you can also consider it as similar to the introduction of the repo agreement in traditional finance. And that basically changed the landscape for financing and money markets. Lastly, we can't talk about altcoins without going into meme coins. This was also one of the barometers for when we thought the market was overheated when Bitcoin was trading at 74,000. because I think derivative positions and funding rates in meme coin futures were very, very expensive. That's it. Meme coins is all about culture, and they are the ultimate expression of the wealthy having too much money to throw around. So popular meme coins like Doge, Pepe are good to watch out for. And as we go into the US elections, you could watch for coins like MAGA, which is actually Trump, and I guess Bowden. So these are a little bit left field in the sense that this is not something the traditional investor would really look at, but these are just flares, and they do have a big part to play in crypto culture. And I guess to wrap up, let's go over some of what we covered. Specifically on Bitcoin halvings, I think it's safe to say that the halving event itself is not conclusively bullish. Key point being that we've only ever had 3 halvings, and it's not really enough to conclude that the Bitcoin halving itself causes a rise in price. More importantly, though, if you're ever going to take away something, that Bitcoin cycle is actually very closely aligned with the business and market cycle. The halving does play a very important point within it. And if the S&P 500 can make new all-time highs because it is as a mark of being close to the US economic cycle, I don't see any reason why Bitcoin can't. I think most investors who get into crypto generally look very much at Bitcoin, maybe Ethereum. I would say don't sleep on altcoins because the market cap growth can be explosive and a multiple or several multiples over Bitcoins. The outlook for the market, at least in the immediate term, is structurally bullish. You've got seasonality, the election year, hopefully a Fed that continue to maintain its dovish language. But lastly, also for Bitcoin at least, finally we have legitimacy and an avenue for institutional demand, and that really was missing from the previous cycles. As always, we preach risk management. We think that things are bullish, but as some of you probably have seen based on the flushes that we have experienced, Bitcoin and crypto is volatile. Things are risky, and there are macro factors that could impact this. The coming inflation data being one, and of course the knock-on volatility from the SEC's decision over the ETH ETFs in May. How should one prepare for the coming months? I think that seasonality has always been a good probable play, even if it doesn't always come to pass. I think immediately one should look to take advantage of the strong risk appetite or risk seasonality in April. Just that I think you also need to be prepared to hedge or rebalance your portfolio if and when the inflation narrative changes. Clearly, we are also ramping up in the Bitcoin cycle. Some say that because a new all-time high has been achieved, the cycle is going to be accelerated, it's going to be compressed. But that's it. Most target, a 6-figure Bitcoin price target as a new all-time high. That is very well possible, but be mindful of the volatility. As mentioned previously, a second leverage flush is possible. Outflows from Grayscale and the ETF complex as a whole are still possible. That's it. The leverage has quite, compared to the previous run-up from 69 to 74,000, leverage and funding rates have largely been reset. That's it. If you are going to dip your toes in, please be mindful to only allocate what you are willing to risk. A key thing that, or rather a key mantra that Halogen has repeated many times is allocate, don't speculate. Unless you know what you're doing, of course. Like Zhong, I'm sure. Pay attention to what's happening in ETH. I think there's still plenty of reasons to own exposure to Ethereum. Standard Chartered Bank also has a non-consensus call for an approval decision in May and a year-end price target of 8,000. And lastly, I think for new investors to the space, don't sleep on alt season, embrace it. But again, be mindful only to risk what you are willing to, let go of. Plenty of meme coins have gone to zero in the last year alone. There will plenty more. Plenty of projects raised financing at crazy valuations, only to fall to 90% after that. There will be many more, but within those, there are also the gems, the solid projects that I think will benefit very well from crypto bull cycle. And that is it from me. I think I will turn this over to Jiaying now, and thanks for staying with us.
Okay, so thank you so much, Zhong and Colin, for the very insightful session. I believe that most of us here have gained very valuable insights about the Bitcoin halving event and what you can expect as an investor. So I see some comments in the chat section. I also see one or two questions in the Q&A box. So before we head into the Q&A session, allow me to share a little bit about what we do here at Halogen Capital and some of the products that you could potentially be interested in. So let's see. Okay, so first things first, who are we? So if this is your first time hearing about us, Halogen Capital, we are the first licensed fund manager in Malaysia, providing you exposure to digital assets, aka crypto. So adding to this, we are also fully licensed and regulated by the Securities Commissions Malaysia. You can find our license number at the bottom of the slide for your reference. And this is in short what we do at Halogen Capital. So if our early discussion with Colin and Zhong has piqued your interest in investing in crypto, here are some of the funds. Here are some of our funds to get you started. So okay. Firstly, let me go through one by one. So firstly, we have our flagship fund, which is the Halogen Sharia Bitcoin Fund. This provides you with a regulated and secure way to invest in Bitcoin. So very ideal if you see yourself in this in the long run, basically a long-term crypto investor. Then next in the list, we have our Halogen Sharia Ethereum Fund. So this was actually launched in January this year, and as the name suggests, it invests directly in Ethereum, similar to our Bitcoin fund. But hear me out. What's different about this fund is that it has a proof of stake feature, which allows you to earn a 3% yield from the Ethereum network itself. And what's also interesting about this is this proof of staking part will be handled by us for you. And who is this fund for? Besides being a long-term investor in crypto as well, it is also suitable for those of you who's looking to capitalize on the Ethereum ETF narrative. So that's for Ethereum fund. Thirdly, in the list, we have our Halogen Sharia Ringgit Income Fund. So this is a Ringgit denominated fixed income fund designed for liquidity storage and capital preservation. So if you're someone who, you don't prefer to take too much risk, but you want something more stable and regular income, this could be a fund for you. So the aim of this fund is actually to provide you with offer a better alternative to fixed deposits. And on top of this, what's also interesting is that it provides you with the T+1 liquidity convenience. So meaning you can turn your investment into cash next business day. And so basically super flexible and ease of access to your funds. Then yes, in fact, all of our funds here have the T+1 liquidity function and Sharia compliant with a minimum investment of 10,000 ringgit. So for those of you who are here who are still staying here, we have a little teaser for you. As you can see next in the list, we are currently developing another exciting fund called the Halogen Sharia Crypto Titans Fund. And what this fund is all about, it is a multi-coin fund that invests in the largest cryptocurrencies in terms of market cap in the market. So if you don't want to be picking your coins, you're not too sure, but you want to stay invested in the, let's say, the top coins in the largest market cap in the market, this fund could be your pick actually. So this is just a slight teaser for now. If you're interested to know more, do leave us your interest either through our website or social media, and be on the lookout for the information of this fund. So lastly, in the list, you can see we have one more. So moving on to our fifth product, which is also a very, very interesting one, which is our private mandates. So earlier, Colin has mentioned a little bit about private mandates. So how this works is, say you have about 100 ringgit, 100,000 ringgit, and you want to be diversifying between, say, Bitcoin and Ethereum, or perhaps add another altcoin into the play, like maybe Render into the mix, because why not? So this is where our private mandates come into play, because with private mandates, this is where we can assist you in creating custom strategies tailored to your investment preferences. And aside from that, we also have an in-house team with the expertise to work this out for you. So if you're interested to explore this option and embracing some risks, we already have several private mandates established. So feel free to contact us through our website or ask us any questions about it in a Q&A session later. So having said all of this, you now understand what we do, what we offer. Let's say you're ready to invest with us. What can you do right now? So all you need to do right now is very simple. All you need to do is to scan this QR code right here on this screen, displayed on your screen, and sign up for a wallet account. So by signing up for it, it takes you, I think, less than 5 minutes, or less than 5 minutes. Then all you need to do is sign up, and then you can start investing with us already. So sign up for an account, or if you have more questions, feel free to drop us a DM on our socials or head to our website for more information. Then so this is what we have. This is in short what we do, what we offer. And yeah, feel free to reach out to us if you have any questions, or through our social handles, or right now actually. So okay, I think let's proceed to our Q&A session right now. So let me hit to the Q&A session first. Q&A box. Okay, I think not much in the Q&A box. There's one on what's the difference between Bitcoin and Bitcoin BCH, Bitcoin Cash. Maybe any of you want to take it?
I think just very quickly, so BTC is Bitcoin, so the original, I guess, sort of granddaddy sort of chain. And then BCH is Bitcoin Cash. It's a fork of Bitcoin. So what happened during that time is that, you know, what sort of galvanized or led to the creation of Bitcoin Cash was because of differing viewpoints of what Bitcoin should be. So there are some people that say Bitcoin should be, you know, store of values like digital gold, but there are also points of view that, you know, Bitcoin should be digital cash, where you can, you know, conduct payments and do transfers and things like that through the blockchain. Now, because of at certain times when, you know, the chain is busy, there's a lot of people using the chain, the gas fees actually increase, right? So I just looked it up earlier. Right now, you know, to transact on Bitcoin, it's like $4, right, to make a transfer of any amount. Obviously, if you are doing big amounts, you don't really care. But if you are doing smaller amounts, obviously $4 is a lot from a gas fee perspective. So there's a group of people that actually broke away from the original Bitcoin team and created Bitcoin Cash. And essentially, the whole selling point of Bitcoin Cash is that they made certain modifications and changes to the original Bitcoin code, so that they can have more transactions and cheaper gas fees when you transact. So, you know, it's faster. It's not 10 minutes. You know, to wait for your transaction to go through, and it's cheaper. So it's in the sense, I believe. Yeah. So that's sort of the difference between Bitcoin and Bitcoin Cash. Yeah.
Okay, so to the anonymous attendee, hope that answered your question. We have one more. So if the Fed has rate cuts, what would the impact be on crypto? Will the USD be stronger and weaken the crypto? Maybe.
I'll take this one. Generally, rate cuts in the US by the Fed has actually the opposite effect. What happens is twofold. First being that there is less pressure to service your debt, so you have more capital to spend, which creates what we call easier financial conditions, and you would be able to spend your money on more discretionary things or invest in riskier assets. Going to the second part would generally be that the interest rate that you get on cash is always the barometer for how much risk you as an investor will want to take. So with lower rates, generally you would be spurred to take on more risk because there is less incentive for you to park your excess savings in cash and earn a high interest rate because the rate will no longer be high. So I will also say that that also has effect on weakening the dollar actually, because especially in this cycle, because in the last 2 years, the narrative for a higher US dollar versus the rest of the world's currencies has been the carry trade, where you earn a high interest rate on a dollar and less by investing in other currencies. Case in point, the Malaysian ringgit, where our interest rate is only 3% versus the 5.25 in the US. So yeah.
Okay, can you we have one by Joshua. So can you comment on your outlook on Cardano in this cycle? It seems like its price action is lagging versus other top altcoins. Both of you want to?
I can take this. I frankly don't look a lot at Cardano, largely because it is kind of has fallen by the wayside, as you said. Cardano, I think, lacks a few things. Number one being a strong narrative to put it back in the spotlight. And also, I think, lacks three things actually. A strong narrative. I think a lot of the development activity has also moved away. And the third being that the stablecoin reserve or activity being put into Cardano shows that the ecosystem doesn't really have much of a user base. So in that sense, I think Cardano doesn't really have much of a story going for it at the moment, and which is why the prices lag.
All right, so now another one, I think it's on Solana. So Solana is now the hot narrative and is poised to overtake Ethereum. Are you guys looking into this crypto?
Yes, we are. I guess it's safe to say that Solana would be a key entry into our next product, which would be the Halogen Crypto Titans Fund. But as a standalone fund, there is no plan to offer it at the moment.
Okay, let's see. Okay, we have a question in the chat actually. So, okay, by meeting. So by the next halving expected in 2028, the reward will be down to 1.5625 BTC and maybe a disincentive for miners. So if the ecosystem has less parties validating the transactions, is there a concern about disruption in the whole blockchain and collapse subsequently? Or in extreme case, by the 7th or 8th halving, miners are not keen and quit. Then who will validate the transaction to prevent a collapse?
Yeah, so this is a very good question about the way mining works. I think you have seen, I think in the past, certainly up to this particular halving, right? So over the time, even though the halving happens, but the price of Bitcoin has actually more than doubled each cycle, right? So from a miner perspective, they have been able to remain profitable. And obviously, you could say that the prices will not continue to double, and that's a perfectly valid sort of thesis. And I think there's a lot of discussion ongoing with then how do miners achieve sustainability, and that's an interesting question. I earlier mentioned inscriptions in my early slide. I think this is something that is probably a bit esoteric for people that are not in the crypto industry, but essentially this is actually a major innovation, I would say, for the Bitcoin blockchain. Precisely because it creates more use cases for blockchain for Bitcoin beyond just the simple store value or as a form of payments, right? So you could actually build apps now on the Bitcoin blockchain. You could create altcoins, you could create NFTs, and you could do a lot of that other stuff. But I think all this is what does all these additional use cases mean? Additional use cases means more people using the chain, means more people paying gas fees, and we have actually seen on certain days where there is a lot of activities, particularly among these inscriptions and stuff like that, that the gas fees that, the transaction fees and the gas fees that the miners collect from these transactions actually surpass the mining subsidy that they get from mining Bitcoin. So actually, to be honest, the answer is really obvious, I think, for the space, for the people mining Bitcoin. Do you believe that activity will continue to pick up? Do you believe that the technology will continue to innovate, that we can bring in more people into the space, use the chain, and therefore then the transaction fees will sort of pay the miners by itself, and then whether you have a mining subsidy or whether you don't have a mining subsidy is just like a cherry on top of the cupcake. So this is definitely something that is actively being discussed. But yeah, I think there's also there's also people working to constantly innovate on the chain to sort of increase usage, hence increase gas fees, hence miners will have incentive to continue to mine. I think also underrated on the other side of this is that obviously miners are getting more efficient as well. So the machines get the mining machines get more efficient. They get cheaper. They find cheaper sources of electricity to mine and stuff like that. So there are very practical market effects that affect who will mine, how many people are mining, how many people are putting machines into the market. Like I said, this is sort of an industry. This is no longer just some people running some machines at home. So this is definitely something that the industry is actively watching and working on.
All right, I think we have another question. Are the crypto funds taxable? So maybe Colin.
Yeah, I'll take that. So our crypto funds are Sharia compliant, and as a local asset, they don't fall under your capital gains tax if you are an investor. So that pretty much answers the question. They also consider a local asset, so you don't have to worry about falling afoul of tax on foreign source income or foreign source gains, which might come into play sooner than you think.
Okay, another one. Is it okay or still early to invest in the FTM coin? What about Solana? Anybody wants to take this? Is it okay or still early to invest in FTM coin?
Do your own research is all I can say. I think that in alt season, almost any coin that you buy should have positive return. Phantom is a bit interesting in the sense that there are new narratives that have revived it. Phantom actually has a bit of a history in the sense that its developer, its champion, is a very eccentric guy and also very temperamental guy who sort of like tried to quit the industry too many times. But he's currently working on a new upgrade for the chain that would actually increase its efficiency and transactions per second. And that kind of narrative has sort of helped FTM climb from, I think, 40 cents in the last 2 months to where it is today at around 110. So for a narrative, FTM is still okay. Price target wise, if we break above 120, you're looking around 168. But I would say that for the most part, you still need to figure out whether you're able to, accept the, a price loss of something like half at least if things don't go well, right? So I say that Phantom has some stuff going for it, but again, this is the market. So
all right, I think we have two questions about our funds. So when will staking rewards come into effect for the Ethereum fund? Then I think the next one is, are you looking into mid-cap crypto fund to include crypto like Phantom? Yeah, I think for that.
I guess those are questions for me as well.
Yeah.
Okay. So the first question about Ethereum staking rewards into our fund. Technically, staking is a discretionary decision done by our fund managers, meaning that based on the amount of Ether they have in the fund, they would choose a certain percentage to stake it, and those staking rewards are translated directly into the fund's net asset value. So the answer is that when are we going to implement? When will you realize it? when staking is, well, for staked positions, those rewards are continuously being realized and added into the fund NAV. And the second one would be the mid-cap coins. I would say that if there is demand for it, it's always something worth looking into. So our current roadmap is to launch the large cap crypto, or rather the Sharia large cap crypto fund. We would look to other products as the roadmap, as we complete the roadmap. But for now, I think the answer is outside of a private mandate, probably not.
Okay, another question. Since everyone is asking about narratives, what's your take on the RWA assets after Bitcoin halving, since BlackRock is into it?
I can take a stab at that, and then Colin can probably jump in. I think RWAs are interesting development, and I think this is also something that we're watching very closely. I think if you look at what RWAs were at this point in time, so they actually really gained popularity in 2022, where a lot of people were tokenizing US Treasuries onto chain, right? So that's one end of the risk spectrum. Very, very safe US Treasuries, because crypto people wanted to keep their money in stables, but they also wanted to get yield, right? And at that point in time in 2022, the yield from US Treasuries actually outstripped the yield from DeFi that they could get from from holding stables. Then on the other end, there are also people trying to do private credit on chain. And then, those are, really high risk, close to what we would look at from a P2P financing perspective, if you're familiar with that instrument. And now we have institutions that are trying to play in between, right? Everything here. I think it's interesting because I think from an institutional perspective, they themselves also have incentives to tokenize, because a lot of them are using legacy systems, are using legacy processes, and doing a tokenization incentive or tokenizing some of their funds and stuff like that can be a gateway to modernizing their infrastructure, cleaning up their operations, and in general make the fund a lot more efficient. And that is, I think, one of the main crux of why they are exploring tokenization. It also helps, obviously, that when you tokenize a fund, it automatically it's available on the blockchain. You've got lots of people that can actually buy it. It's available 24/7, right? It doesn't stop at 5 p.m. right after office hours. So things like that are what is driving RWA exploration and what is driving tokenization. Actually, a lot of people have been working on this. I would say JP Morgan, Goldman Sachs are probably sort of leaders, Fidelity sort of leaders in this space, and have invested a lot of resources. I do expect to continue to hear things around tokenization, stories around tokenization, and developments around tokenization, in the future, as a lot of these things come out from their labs and things like that, and they actually go on to do real use cases. Yeah.
I think Zhong has more or less spoken in depth about the RWA potential for financial assets. I would say that RWA or tokenization has always been a very interesting and one could say potentially limitless field, because you could technically tokenize anything from ownership in oil barrels to NFT royalties or music royalties or real estate even, right? So I would say that there's a lot of potential in the RWA narrative. For now, BlackRock stepping in has given the financial asset side of things a big boost. And it has kind of revived the RWA narrative from being a fairly dead one last year, or rather dead one in the start of the year, to one that's got some life again. Overall, I think that this narrative will never go away. And for a long-term play, it is probably a lot more stable than some of the other altcoin narratives that you could find out there.
Okay, one more question for our funds. So who is your custodian for the crypto? Do you acquire your crypto from DEXs?
Well, I mean, crypto can be acquired from any of the licensed channels that we have access to. I don't think I can talk too much about this on open space and to non-clients. But everything should be in our prospectus and investment and then IMAs, which are on our websites. But I would safely say that we do have a custodian. We use a local custodian, UTMB, and a crypto custodian aside from that. And for the record, if you're asking about local DEXs, we do partner with our local DEXs. They are certified as Sharia compliant by our advisor. So they are certainly one of our primary go-tos for acquiring crypto.
Okay, I think one last question to wrap it up, which is on the taxability. So regarding taxability, is crypto still taxable even with the proposal plan to tax FSI, foreign source income, in budget 2022 was put on hold? What's your take on this?
You can go first, Zhong.
I'm not a tax expert, so I would say consult your if you're doing taxes, consult your tax expert. Yeah, yeah.
I can
No,
answer
no,
some.
no,
Yeah.
yeah.
I can answer something with relation to our funds. If you invest in the Halogen funds, you are technically investing in a local asset. So your income isn't foreign source income. In the first place, I guess the ruling to tax crypto income is a little bit, rather it's very vague. It's quite broad-based in the sense that what is crypto income? If you buy Bitcoin and hold it for a year versus if you trade Bitcoin every single day like a day trader. So if I'm not mistaken, it is the income that is derived from daily like business activities, trading crypto would be taxed, although that was not made very clear. So as Zhong says, please consult a tax advisor. But for our funds, at least, you are buying a local asset. It doesn't really count as a foreign source income. So yeah.
All right, I think that's all the questions that we can answer for this round. If I think we still have a few, but yeah, we will feel free to reach out to us either through our socials or website to
Maybe I can answer one last one very briefly, which was the
Sure.
when can we buy? So I see.
Yeah.
Right. Considering it's an all-time high at the moment, when can we buy Bitcoin again?
Sure.
Again, we talk about allocate, don't speculate. We talk about having some Bitcoin in your portfolio as a whole, as to create a more robust and superior portfolio, right? Our mantra has always been, you get Bitcoin at the price, well, or rather the second best time to buy Bitcoin is always now, right? If you never bought it like 10 years ago, at least that will keep your portfolio metrics superior in the sense that you have a higher risk-adjusted return ratio, such better Sharpe ratios, and basically more diversified as a whole, right? Yes, you could try to time the market, but it's probably better to just put some money in and try not to think about it and consider it a long-term investment. So yes, it is near all-time highs again. Honestly, there's no right answer to when should you buy. If I had that crystal ball, I wouldn't be working either. So all I can say is just try not to think too much about it. Just take the plunge. Just know that by having at least 1 to 2% of Bitcoin, your portfolio as a whole is more robust and compared to a traditional portfolio that doesn't have Bitcoin, especially if you're holding mainly, Malaysian-based investments. That's all.
All right, I think that's all the time that we have for today. Thank you so much, everyone, for your questions and for staying. I think I still see quite a number of you. Yeah, thank you so much for staying through and for all your questions. So if you have any more questions regarding our funds, feel free to reach out to us. You can first sign up for an account, or if you have questions you'd like to get us to address, then you can just head out to our socials or head out to our website to get to submit your interest to us. So I think that's all the time we have. Thank you so much everyone for joining. I see a lot of questions on can you all get the presentation deck and the recording. Yes, you can. So we will be sending all of this over in a few days right to your email. So thank you so much everyone for joining, and we'll see you in our next webinar. Thanks, Colin. Thanks, Zhong. Bye-bye.
Thanks, everyone. Bye.
Bye.
Okay.
Bye. See you guys. Good luck in the
Yeah.
markets.
Bye to you. Yeah, thanks, everyone. Bye.